Just 3 weeks ago, I was catching nearly 100 R. I was catching every single trade. I was making a lot of money, especially on the personal. The past 2 weeks, right? Let's scroll down. This is my live data collection. I was on, what? I had so many L's in a row. I don't know what the hell is going on, right? Nah, I do know. I want to explain to you guys what's going on. I was catching a lot of invalid trades, and it wasn't just invalid. A lot of them did hit my criteria, but what happened was it just didn't play out. Like, I had my stuff, but it just didn't play out. Just like this one. Fit entry criteria, but didn't play out. So, the importance of data collection. I want to explain to you guys why it is so important to take your time and actually record down your trades, record down the data. Because if you don't, you're going to get into gamble trading, you're going to chase your losses, it's going to be that bad. Whereas for me, right now, I'm currently down around 10R. This was believe it or not, this was a forward test. This right here was a forward test. The one forward test I did ran 11R, but I don't want to talk too much about it because it's gonna get to my head. Okay, so I want you guys to make a Notion or anywhere where you can actually like write down your data and then open it up, and then there's your trades, yeah, your actual trade setups. So these are the only things you need on the data collection, and I highly suggest before you actually do like real trades, you want to have at least nearly 1,000 back tests, yeah, for your strategy, and then 100 live tests for your strategy. You want to take at least 100 trades just so you know the win rate, the outcomes, what's happening. Because once you come to like real trading, you're going to have a lot of external factors, right? External losses, external wins, and you're gonna have some lucky and unlucky plays. There could be like spreads, slippage, or news happened and you didn't know and hit your TP, or news happened, you got slipped, you lost what, 3-4R because of slippage. You don't know. But that's why it's so important to actually record data. So the first thing you need is the pair, right? If you guys can see here, you want to mark out what pair it is, right? And you want to have a page here where you can actually open the trade and you see like what's actually happening, what's happening to the charts. You want to explain the structure, the supply and demand, depending on your strategy. And then for me, I have the trade and then the confirm, yeah. So let me show you this trade 17R. So this trade here, I was explaining like, alright, this is the setup, and then the confirmation came from here. I took the candle rejection here, yeah. It rejected, and that was my confirmation. That's all source. Don't worry about that. So that's what you need. You need the pictures. You need the actual screenshots, and then you need the pair. So you can go back in time, look at this pair. Like if you open your MT5 or MT4 and you see all these losses, you don't want to just look at them and say, yeah, like these are all losses. You want to see individual trades. Like that's why you have a Notion. You have data, so you see how the trade actually played out. Like how did you lose this trade? You don't want to just look at the reds and not understand what you did wrong. You want to have data here so you understand like what you actually did wrong. So that's the importance of that. You wanna mark out like, was this a long or a short? Yeah, this is very important because if you don't mark this out, you're not gonna know like, oh, the ratio of you going long and going short. Because if I know that my ratio for going short is more profitable than me going long, then I'm gonna stick with shorts. I'm gonna be more confident when I get shorts. For longs, then I wouldn't mind if I take losses. Yeah, the targets is important because you don't wanna just say, oh, I'm targeting 8R, I'm targeting 6R. If you have data collected and it says that your average is 8 or 6R, then okay, you can say that that's your main target. But if I'm doing that too, I would always have like if I'm going long, right, I would always have a supply zone up there. So I'll target 8R, alright, maybe like 9% partials, and then the rest to that supply zone. So that's why you want to mark out the target and your thought process. All this here, this data collection here, is all my thought process. What I'm thinking at the time, so I can go back in the future. In the future, if I want to go back, I'll say, okay, like I thought about this when this happened, but now that it's been a few months, I've changed on my strategy. I can see that, oh, this would have been invalid to me. Yeah, I want to change this up now because I would have not taken this anymore. Like that's when you get to new data collection, and then your data just gets way better. All right. So that's the target, the stop loss. you always need a reason for your stop loss. You don't want to mark out, oh, my stop loss was 2 pips. You want to explain why your stop loss was 2 pips, yeah? Because I see a lot of new traders who go for funded accounts. They don't use like, 2 pips, which is 10 lots, and then this trade was 1 pip, so I also use 10 lots. That doesn't work. You need to adjust your risk. Like, you need to actually work on risk management. That's why you have a stop loss, and you wanted to explain why the stop loss is there. Because for me, right, let's say if I open this trade 1 pip below demand, yeah, this one is nice. So I took a loss here, right? But if I had a mitigation halfway, then or 75% mitigation, I'll enter the trade off the candle close and then put my stop loss at where the low was. But if it was if it barely tapped and then like let's say the price was here, right? I can't really zoom in. If price was here and let's say I took the trade here, right? I wouldn't have a stop loss at the bottom here. In this case, since there was like barely any mitigation, I'll move the stop loss all the way down and add an extra pip, because especially if the stop loss is 0.8 pips, I'll always need to add more pips to it, because you gotta account for spread, slippage, and all these external factors. So that's why you need to explain why stop loss was there, and etc. So over here was a result. So what actually happened? Did it hit your target? Did it hit your stop loss? What happened? Yeah. So in this case over here, I got stopped out and then it ran to 27R. So yeah, I got stopped out here, hit my plan. It didn't really give me a candle close above, so I didn't move my stop loss to break even. So that's why I got stopped out, and then it ran 27R. So that's the result, yeah. Now, this is the very important parts. So these are all like minor stuff that you don't have to worry about. Like I made it such a big deal, but trust me, it is a big deal, but it's not as important as the next few parts. So you have the entry confluences. What were the confluence for the entry? If there was one confluence, like, I saw that it was pro trend, so I took the trade because it was the fuck, you're not getting much. You need to mark out why you took the trade, yeah? The confluences that you took the trade. For me, it was on 1 minute, it was pro trend, it was a continuation, and it filled a fair value gap or an imbalance. So I would always mark these out. And then you have the confirmation types, yeah? What was the confirmation you took to actually enter this trade? So for me, I would always look at like minor structure to confirm my zones. So let's say look at number 1. In this case, I had chalk here, right? Change character, reacted off this imbalance, and then it created me an F plus liquidity. So after the F plus liquidity came back, that's when I took the trade. I took it off the candle closed, yeah? It closed below, I took the trade, and stop loss was a bit higher because I'm not gonna put my stop loss at 0.2 pips. It doesn't make sense. Sometimes you just gotta be like, look at it and you gotta be rational about it, yeah? So I put my stop loss just about the high of the zone. So that was my my confirmation, yeah? The candlestick close was my last confirmation. So you wanna mark out like what type of entry you took, yeah? For me, I have the chalk plus F boss, the chalk plus boss, the boss plus F boss, liquidity, and then also always the candle rejection, or sometimes the chalk confirmation. It doesn't create F boss, but it goes straight to a demand zone. It gives you the perfect rejection. So that's what I would take. And then the session. This is really important. A lot of people don't understand what the sessions are. The sessions, there's Tokyo, which is Asia. You have New York and you have London, alright? Asia, London, New York. Those are the only ones you need to worry about, alright? Don't worry about Sydney. You need to understand when the spread hours are, when banks aren't open, right? If you're living in Melbourne, it's around 9 a.m. Yeah, so I think it's 8 or 9 a.m. to 11 a.m. to 12 p.m. That's the spread hours. That's when all the spreads are crazy. So if I bought something here, I get slipped like 44 pips or some shit. You want to know when not to trade and when to trade. For me, my best trades come when I'm trading London or New York. Yeah, Asia, it just doesn't work for me. Look, it was in my back tested data, but I realized like Asia doesn't really play out because you have the Asia trap. I'll make a video on the Asia trap soon. I have it in my my little my friend group where I taught them what it was. So sessions are really important because London, right? For us, London will start around 7 p.m., 6 to 7 p.m. So at 6 to 7 p.m., that's when I know that, okay, that's when I'm trading. Because you don't want to just hop on the charts and then just trade, yeah? You want to actually have a session, do all your setups, do all your analysis, and then set alerts. You don't want to just hop on the charts and be like, shit, like, bro, like, I need to make money today. I need to make money today. Like, I'm down bad. If you don't stick to your plan and have a session to trade, and you're trading every session, you're just gonna fuck yourself over. Like, you can't be profitable if you're looking for trades. The trades need to come to you. That's the only way to make money. You need to be disciplined. All right. So let me just scroll a bit more. So now you want to ask yourself like reasons, like why was this trade valid? Why am I taking this trade? Yeah, like literally write it down. Like once you enter the trade, yeah, start writing your data. Yeah, start collecting data. Once you enter the trade, write it down. So then you know that if you get stopped out, you're not gonna revenge trade. Yeah, you had a reason right there, and then you got stopped out. That's the reason for entering. No more entries. Yeah, you're not gonna enter anymore. Because after that, you're just gonna chase losses, gamble. Oh, but if I make this much, I'm gonna make back my money. It does not work. All right, you need mark out your reasons why, and then explain the reasons why. Yeah. Once you have that, that's when the trade is valid. All right. Because if you don't have a reason to enter the trade and you just entered it, that's not a valid setup because you just forced entry just because you wanted to make money. Yeah. Now I'm not saying that like you can't make money. You can, but there's difference. There's like a huge difference between actually trading and being disciplined and gambling. Gamblers can still make money, but we want to be traders, not gamblers. Yeah, we want to have risk management. We want to focus on that because, like, if I give you an example like this, right? Like this should change your mindset. If I was in a trade right now and I was at 5R, right? My TP is at let's say 6 or 7R, and then let's say I'm risking $100. So I'm up $600, alright? I'm up $600. No, I'm up $500. I'm up 5R, and my 6R is TP. And then it just goes down all the way to my break even, yeah? It's my stop loss at break even. Now, from my account being at $10,000, yeah, it was up 10,500, right? Now, this is where it gets to your psychology. $10,500 goes down to 10,000. You're back down to 10,000. You make another trade, you lose $100, and then you lose another $100 after another trade, right? You try to chase that back, you lose another $200. Now you're down $400, right? You were $10,500, and now you're down to $9,600. That's a huge difference on just a little psychological issue. That's why you want to mark out reasons for why entering trades, so it prevents you from doing all this extra stuff. Because if you're just looking at your phone, pressing buy and sell, you don't realize the mistakes you're making until you actually lose money. So that's why I don't recommend like not having a reason. You want to always have a reason before you enter a trade. If you don't have a reason, don't enter. Don't force any setups. You want to have quality trades over quantity trades. Quantity will always screw you over, while quality trades, taking the most high probability setups, will set you up for success. Such a hard word to say. So after the reasons part, right, you want to mark up the notes. For the notes, you want to mark down like how you were feeling. Yeah, your actual feelings during the setup. Like in this case, right, I felt scared because the price did not reject, but instead consolidated. So let me just open this trade again. You see how it consolidated here? I was shitting my pants. I was like, shit, like what's happening? Because I was expecting that once we got the rejection, because I collected so much data, right? Once we got the rejection, I thought they would just down or just hit my stop loss, and it's fine. But in this case, we're just consolidating, and I was like, oh no. And then I was thinking about the like retail stuff. I was like, nah, this is a bullish flag. Nah, why is it a bullish flag? And then I was thinking like, damn, retail's still profitable, right? Retail's probably taking this long too, and I'm taking it short. Like maybe I'm gonna get stopped out. That's all like psychological stuff I want to write down, right? How I was feeling, what I was doing, I wrote it down. Lucky I actually won this trade, but that's like reasons for it. So give me another example. I'll go out. Notes. I got stopped out before it ran 27 hour. Alright. I should have had my stop loss at 1 pip below the secret my secret source zone. But because I tested it so much, right? But I didn't see it, like I didn't realize that instead of forcing this this win, I could have caught a higher RR if I just lowered my stop, like increased my stop loss. I could have caught a higher RR because I got too greedy with the like tight stop losses. So me knowing that now, the next trade was better, right? This trade was near perfect after that. Like just because I recorded this trade, yeah, I got stopped out, right? But instead of taking that loss and then chasing it, making more trades, I noted down what happened, right? I should have done this, right? I'm not gonna say, fuck, what did I do? Now I gotta gamble, I gotta make these trades, I gotta make my money back. It doesn't matter. Because after that, my next trade, right? It was super clean, it was super calm, right? Open that, it was a very nice setup. I didn't force anything. I waited until I had a valid setup. So this trade alone, number 2, I could have lost a lot of money, yeah? Just because of that psychological damage right there, I could have lost so much money trying to chase that. But I didn't. I stayed quiet, I waited for the market to give me a perfect setup, and then I took a trade. And that caught me 13R, right? That's a simple fix of psychology, whereas the old me, like me 4 or 5 months ago, I would have gambled that shit, alright? On a demo account, I would have not, but live account, like you didn't realize it, but you would have done it. Like you would have gambled. But that's why me running down that note stopped me and prevented me from gambling, right? This is why it's so important to actually collect data. And after that, had the biggest win streak of my life, right? Had a loss. This was the start to my downfall. Now, all these trades hit my criteria besides the last one. Yeah, I took 2 trades when I should have stopped. Right here. So he gave me a chalk plus F-boss. Had a set up here and had a set up here because I wanted to take the trade off this chalk. I had a limit order here. I wasn't supposed to have a limit order, so I broke my rules. I was meant to wait for a candle rejection. It never gave me that. And I also took a trade here as well because it rejected on 15 seconds. These 2 trades were invalid to me. Even though I took it and I lost, I risked 0.5 as well. I risked 0.5%. So I lost 1% on this trade. This last trade I lost 1% because I didn't stick to my rules. Yeah, I just wanted to make a win. And then that's when I thought, I didn't stick to my rules. The psychology got to me. Yeah. So that's why that's why I wrote it down and then I started making this video. I was like, you know, like I might as well make this video here to explain what's happening. And then this was the forward test. Everything here was just like, just bad week. Just bad. The past 2 weeks is just really bad. Had a break even here as well before it ran. I entered here. I entered around here and I got stopped out here. Yeah. After rejection, I had a stop loss around here. But yeah, thank you guys for watching. This is a pretty long video, but I hope you guys learned something about here. If you want this data, this template, just wait until I link it down because I'll be making another version of this. But yeah, just remember to click the 100 trades. Bye.